What's up, everybody? Welcome to the Stocks channel. Today in the stock market, we had the CPI data report come in a bit hotter than expected, but overall the indices are still in the range and we still have no clear breakout from the trading range. With PPI data coming tomorrow, will we finally break out of this trading range? First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So first things first, a couple of you were asking for a checkup of the performance of the trading account. So if I take a quick screenshot over here on the other side of the screen, you can see that I am currently up 39% for the year to date, and we are sitting at brand new all-time highs. And we had this very solid trade that we had the breakout, mostly due to Tesla stock, but other things as well. And when you start a trading year, you never truly know how well the year is going to go, but I must say only about one quarter into the year, I am very optimistic on what kind of year this can become. And today in the Discord server, I did add 2 more trade ideas that I think are going to do very well as swing trades with very low risk setup. So I do think this is going to remain a very solid trading year, and I do think it is going to be very impressive returns by the end of the year. So the number one way we are crushing this market is simply by doing the stock pickers market mentality, because the indices are largely just going sideways. And you can see even with today's price action, with a slightly higher than expected CPI data, we still did not break down below the bottom of the range on SPY. And if you look at the Bollinger Bands, even if we do start to break down, we're very likely only going down towards this support right around 507 at the rising 50 EMA before we find significant support yet again. And from today's close down to 507 is only about 1.3% lower. Now that doesn't mean you can't trade the indices. We actually did extremely well today trading the indices because they were stuck in a range. And when you're stuck in a range, you really just want to buy at the top of the range and sell at the top of the range. And you don't really want to hold any positions for too long because you're not expecting any breakouts or any trends in a range trading day. So as long as you did that today, you should have absolutely crushed it. And that's exactly what I suggested to do in the Discord server. And I know those of you that were trading the range did very well today, even though the markets were mostly just chopping around throughout the day. Now keep in mind that's a day trading suggestion, because if you swing traded overnight, you either did very well or very poorly. If you were long, you did poorly, and if you shorted, you did very well. But as I told you last night, we went into the CPI data very cash heavy so that we could react to the price action no matter if it went up or down. And that basically puts us in the position to react to price and not try to gamble on whether the CPI data was going to be hot or cool. So we did put that cash to work today. There's 2 swing trade ideas that I'm very optimistic about that we started today, as well as day trading the indices in the range. So today was a very successful trading day, and I think we are going to have a very strong quarter 2 because I'm seeing a lot of opportunities in stocks that I really think are going to do very well. So for the most part, not too much change from last night's update. On SPY, we still need to watch the bottom of the range right around 512, and if we break below 512, we're looking for 507. And if we stay within the range, we're still looking for resistance between 517 and 520. And if we break out of the range to the upside, we need to break above 520, and then we'll likely go to 525. So as I always tell you, trade the range while we're in it and then trade the breakout direction. And tomorrow with the PPI data, it is possible we get a breakout to the upside or the downside and finally break out of this range. So if we do break out of the range, then you'll be looking for a much smoother trend day that will likely take us to the lower support or the brand new all-time high at 525. Now, I will caution you against just assuming because the CPI data came in a little bit hot that was definitely the cause of the sell-off. If you've been following me for any amount of time, I always follow the chart over everything. So I do believe even though we did get a sell-off on CPI data, it is still possible for the market to go higher tomorrow on the PPI data. Doesn't mean it will, but it's definitely possible. So if you shorted the close simply because the CPI data was hot, you could have a very bad day tomorrow if we gap up and start to run. So stay objective and follow those charts. And remember, while we're in this range, it is not a bad idea to go to cash and do a lot more day trading. On the NASDAQ 100 triple Qs, we were down 0.87% today, and the triple Qs were very good for range trading today because we came to the bottom of the range at 437 and continued to bounce to a resistance level in the day trading channel, which is up here right around 438.5. So if you look at lower time frames, we really just ping-ponged around in that range all day long, and that's why we did very well day trading it. And that's also why we went overnight through cash, because we didn't want to gamble on whether we had a gap up or a gap down. We simply wanted to react with our cash based on the price action. So the bottom of the range in the triple Qs will still be 434 to 435, and if we break down below that, we break out of the range and we start heading lower towards the gap fill and support zone between 425 and 428. The bulls need to break the top of the range at 442.6, and then we could push higher towards 448 or a brand new all-time high at 453. So trade the range while we're in it and then trade the breakout once we get it, whether it's higher or lower, we couldn't care less. We just simply want to be objective price action traders, and if we break down, we can short the triple Qs, and if we break out, we want to continue to go long into the higher price targets. On the Dow Jones, we were down 1.11% today, and we are sitting right here at this very critical support at 385, and we did close a bit below it, but as you can see, we're already at the lower Bollinger Band, which means we could either ride the lower Bollinger Band for a few more days to try to get down to 377, or we're going to bounce out of this oversold condition at strong support and bounce back to the top of the range right around 390 to 391. So if you're trading the Dow, you clearly have a downtrend developing here, which you can clearly see from the trend line of lower highs and lower lows. So while we're down below 385, you will want to remain risk off because there's a very good chance below 385 we are going to 377. If we start to bounce from here, look for a push to the top of the range at 389, and if we break that, we go to 391, and then above 391, we're looking for the gap fill right around 395. On the Russell 2000 IWM ETF, we were down 2.64% today, and this is largely due to the increase of the rates because the bond market was dumping today, and these are very rate sensitive, so as rates are going higher, we are definitely going to see selling in the small caps. But I will caution you against getting overly bearish now because we hit the support at 199, and we have this huge gap to fill above 204.47. So with support at 199 and a gap to fill above 204, there's a good chance we will bounce from support and go make an attempt to fill that gap, and then once we fill that gap, we could still put a lower high and continue lower. So as you can tell, the Dow Jones and the IWM are building somewhat of a downtrend in the short term, but we're largely still stuck in this range as long as we're above 199, and if we break below 199, we're looking for 196 next. On the ARKK ETF, we were down 2.32% today, and this is largely the same as the small caps. Rate sensitive, rates were going up as bonds were dumping, and we came back down to this very critical support at 47. And remember, if we break below 47, it validates a double triple top that could take us all the way down towards 44, but we will have strong support right around 45.5. The bulls now need to break this high at 48.6, and then we can push to the top of the range right around 50.7. On the VIX, we were up 5.61% today, and the VIX is bouncing off of 15, so we are definitely seeing the VIX spending a lot of time above 15, which is a trend change than what we've seen in the rest of the bull market this year. And as you can tell, while we are in this range, there's a lot more people that are getting nervous, and we are definitely getting more and more at risk for the bull trend to roll over and start to go through a deeper pullback or a correction. And if we do see more fear, we will see the VIX spiking up here between 18 and 20, and that will lead to some high volume panic selling, which could break critical support. So do be aware of that, but it is still possible from here. The VIX does continue to crush down towards 13, and we could still resume the bull trend. So as I said, range trading, which means we're range bound between support and resistance with no clear trend. So the VIX could really go anywhere it wants to, and it's going to depend on which direction we break out of those ranges. On Bitcoin, we're currently trading just above 69,000, and so far this support at 68,000 is holding up. So the bulls have this chance to bounce off of 68,000 and push to the price target at 75,000, where I do think we're going to find more sellers that could push price lower yet again. If we break support at 68,000, look for support at 65,000, and if we can't hold 65,000, we likely come all the way down to 52,000. On Nvidia stock, we were up 1.97% today, and Nvidia is looking a lot more bullish today because of the bounce, but if you zoom in and look at it, it was really just an oversold correction because we were outside the lower Bollinger Band, and we did bounce back up to close above 857, which completely invalidates the double top because we didn't break down below the neckline for a second day in a row. I still think there's a good chance we could come down here towards 813 to 823, and then from there we could still push to a brand new all-time high. So if you don't mind catching this falling knife in Nvidia, you want to manage your risk down here around the gap fill at 823. Otherwise, wait for a bull breakout back above all of these moving averages, which is going to require a break back over 897. On Tesla stock, we were down 2.89% today, and we came back down to this very critical support zone right around 173, and on the hourly chart I'm actually calling it 171.5, but on the daily chart we are at risk to break down here, which means we could come back down to 167. And then if we break 167, there's a good chance this was a lower high and we're coming down towards 154. Now, if we break back over 173, this could be a pivot from a higher low, and then we should have no trouble getting towards the price targets at 183 and 187. So in Tesla stock, manage your risk at 173, whether you're going short or long, that is your risk level. Below 173, you can be a bear, but above it, you have to be a bull. On Apple stock, we were down 1.11% today, and as you can see, we have finally hit this lower price target right around 167, and from here, I do believe we are going to find buyers in Apple stock that could ignite a bull rally that takes us all the way back into the 180s, and that is likely going to happen as we start running up into earnings. So watch Apple very closely at 167. This is a bear trend and a falling knife, so if you're going long, you need to manage your risk if we start to break below support. But I do believe it's very low risk to do so because we're right next to the risk level with the price action. So 167 is a great risk level, and if we break that, we'll likely start trending down lower towards 163 and then 158. So jumping back over to the S&P 500, as you can tell from the analysis, every index is still stuck in the range, and we do have some weakness showing in the Dow Jones, but overall this is still a market that is just going sideways with no strong trend in either direction. So I will continue to tell you I think this is a stock pickers market, and that is what we're going to continue to focus on in the Discord server. And while the indices are stuck in that range, don't be afraid to trade the range, which simply means you're buying near the bottom of the range and selling near the top of the range. You should be doing great in this market whether you're a bear or a bull because you're giving plenty of opportunities to go short and plenty of opportunities to go long. Manage your risk at the critical levels, and I think you're going to do just fine as long as you have a trade plan and you're staying disciplined. If you want to come crush the market with us, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and my technical analysis as well as all of my trade ideas. As I showed you in the introduction, we are absolutely crushing this market and it is going to remain a very solid trading year, and I'm very excited about a lot of the trades that are up and coming. So if you want to join the Stocks Channel Discord server, you can find out how to join by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.